Hey guys, David Robinson here. Welcome to the apartment investing journey. Excited about our episode today. I've got a guest that I think that has a story that will inspire some of the younger investors out there and break some barriers that you may have in your mind as far as age and being able to achieve some of the real estate investing goals that you may have on your mind. And so, without further ado, Logan Fast, welcome to the show, man.
Hey, David, thanks for having me. Really appreciate it.
My pleasure. My pleasure. So, Logan, if you don't mind, just share with our listeners a brief synopsis of what you've accomplished so far in your real estate investing journey.
Yeah, so I'm 24 right now. I've been investing full time for a little bit over 2 years. I've got 22 rental units. It's all small multifamily. And I've been wholesaling between 1 and 2 houses a month for the past couple years. I've done a couple fix and flips and wholesales here and there, but mostly wholesale.
Great. And you said 22 units total?
Yep.
Okay. And mostly multifamily, small multis.
Yep. Anywhere from 3 to 6 units. Or
Okay.
2 to
Great.
6 units, actually.
2 to 6 units. Okay. Perfect. So this is, I think, we have a broad listener base. Those that are just looking to get started and are interested in, stepping into the small multifamily space. And then there's large syndicators that are doing, 100 unit plus apartment buildings. And so I think you're going to be able to, I think your story will resonate with a lot of our listeners that are looking to get into the space. And a lot of people start with small multi or even single family for that matter. And so I want to talk about this journey that you've gone on over the last 2 years. And so maybe just back us up and tell us about when you first even started thinking about getting into real estate, and then we can take it from there.
Yeah, absolutely. So I graduated college about May of 2017 and started in a corporate job right away. I was doing a customer service job, and basically growing up, if anybody asked me what I wanted to do, I would have probably told them, I don't know, but I don't want to sit in an office all day. And then, graduate college and start my career, and that's exactly what I'm doing. So it was pretty quickly decided that wasn't for me. And right around that time, I had read Rich Dad Poor Dad. Like seems like every real estate investor starts the journey that way.
Seems that's the case.
Yeah, so I read that, and kind of just led me to Bigger Pockets, and then a bunch of other podcasts. And I'd basically sit there at work all day, listen to these podcasts, listen to these people tell their stories about how they're maybe 25, 30, or like us. Those are the ones that especially resonated with me is the younger crowd who basically found financial freedom, or they're doing really well in real estate. And, it just gave me a lot of inspiration that I could also do that. So just spent a ton of time those first about 6 months really studying, kind of learning the game. And basically I just started looking for my first house hack. And then January of 2018, I ended up closing on my first place. It was a 3-unit to house hack. And shortly after that, I ended up leaving the job to pursue real estate full time. I hadn't even done, that's the only deal I had done at that point. But I really just kind of believed in myself and knew that I was going to be able to do it. And, kind of being 22 also is like, I didn't really have that much to lose. Worst case, I would have to go back and get another job.
Yeah. Yeah, that's cool. So did you have any mentors when you first started off, or was it really the podcast and Bigger Pockets, the books that you read? Did you tap into any mentorship programs or any like more formal training, or did you just really rely on those sort of informal training sources to get you started?
I don't think I really did any formal training at the beginning. It was mostly podcasts. A lot of the books cover kind of from start to finish, at least all the basics of real estate. So you can get a really good foundation there. And, you know, and I think that's pretty important to get that foundation. So when you start talking to people, like especially locally, you can have a higher level conversation. You're not asking somebody hey, what's a cap rate, or hey, what does ARV mean, like something like that.
Yeah.
So I really learned the basics there, and then I went on Bigger Pockets, and I just reached out to every investor that was in Omaha and just started trying to connect with people. And it's actually a funny story. That's how I found one of my business partners. Is he didn't even respond to my message, and I was just like, oh, this guy. So I messaged him again, and I was just like, hey, I didn't know if you saw my last message, but just looking, I'm interested in real estate. And that he ended up messaging me back, and we, started a really good relationship, and we've done some cool things. But
Oh, that's cool. Little
yeah,
lesson on persistence right there, huh?
yeah, absolutely.
Okay, cool. So, you're listening to Bigger Pockets, you're reading books, you're listening to podcasts, you're networking on Bigger Pockets, and you spend the first 6 months or so sort of in this learning phase, and then you take action and you find your first multifamily and you house hack it.
Mm-hmm.
And then you take the big leap of quitting your job. So let's talk about that transition and what was the mindset that you had back then. And granted, you've already said that, hey, there's not a whole lot to lose, right? So I'm assuming your expenses were pretty minimal. You could always go back and find another job, but you were going to pursue this. What was your strategy? What was the thought process or the business plan that you were going to execute when you left your corporate job?
Yeah, so I do want to touch on the expense thing, because I think that's huge. And you're right, my expenses were super low. My overhead as far as living expenses were minimal. I had a really long runway. I figured I could make it between 6 and 12 months without making a single dollar in real estate. So if it took quite a bit of time, that was okay, because I had a little bit of money saved up, but I also had some cash flow from that building. And then other than that, I just lived really inexpensively. So
Well, and I think
yeah.
that's a great piece of advice to those that are in this age where you can take some risks. Maybe you don't have a family yet. Maybe your expenses haven't piled up the way they do as you get further on in life, and you can take some risks. And man, what a great way to start your real estate investing career, by house hacking your very first deal. And of all the people that I've listened to and interviewed, it's those that take that approach where their first deal, they're in a position in life where they can house hack their very first investment or property that they buy is an investment property. And it sets such a great foundation moving forward. So that's great that you took that path. Let's talk about the business plan that in your mind you were going to implement when you left your corporate job. What was the strategy that you were going to implement?
Yeah, so actually when I first left the corporate job, I had kind of a partnership lined up with a couple fix and flippers, and I was basically working with them to find them properties. They were covering the marketing, and I was going to go out and basically kind of run the marketing show and get them properties so they could flip. And we would just do a percentage split on fix and flips, and if we decided to wholesale it, it would be the same thing. So that's kind of how it started out, and I'm not sure I would really recommend that. I don't think it's a great approach, because so many investors are looking for different things. Where those guys might pay $100,000 for a property, some other fix and flipper might pay $120,000 for it. So you're missing out on a lot of opportunity there, and probably passing on a lot of deals that you otherwise could wholesale over to somebody else.
So let's talk about that then. What would you do differently rather than going this route of connecting with partners that are in the fix and flip space and really being sort of the boots on the ground deal sourcing and marketing piece? What would you do different this time around?
What I would do is you can basically find out, you can get MLS data and find out basically who's buying properties cash the past 12 months. So what I would do is I would go in, I would find the top 10 to 15 guys that are buying in Omaha, which is my territory here. And I would try to connect with all 10 to 15 of those, find out their criteria, and just start building a relationship with them. There would be nothing exclusive, but you know, it is really nice when you have the kind of relationship where you can send somebody an address before you have something under contract, so they can kind of give you the rundown on, is this going to work for me or not? And that's been huge to me. I mean, I still do that today. I'll send some addresses over, and I know nobody's going to steal those deals from me because we have such a good relationship.
So maybe for those that are, completely new, what's the distinction then? Because it sounds like that was pretty much what you were doing early on. What's the difference? What would you do different than what you did the first time around? Maybe help us understand what you didn't like about your initial strategy and what you would suggest others do today.
Yeah. So the first time around, I was kind of partnered almost exclusively with a couple guys, and they weren't actually that big of fix and flippers. They didn't do that many deals, and they couldn't take down multiple deals a month. But there's guys in every market that probably buy at least 2 houses a month, and those are the guys that you really want to connect with, and especially at the beginning.
Gotcha. Okay. Thank you for clarifying that. So instead of really hitching yourself to a specific fix and flipper that maybe doesn't have the track record you're looking for, you would stay independent and build a broader network of your cash buyers.
Yep, exactly. And I think, and I've heard some people call it like, don't become a cash buyer employee. And that's exactly how I started my journey. I was exactly a cash buyer employee. So yeah, you want to work for yourself and basically give yourself, the highest chance of success.
Okay, cool. So take us from there. You started out working with these fix and flippers. You were sourcing deals, and on the marketing side, what kind of things were you doing, tactically speaking, to find deals?
Yeah, so I've done a little bit of everything. And maybe that's a little bit of my downfall. I've never gone into any strategy and gotten extremely good at it. But I sourced some deals from Craigslist, Facebook. Um, I was doing some texting, some cold calling. I've done mail. Um, I've done a little bit of everything, and everything works. It kind of just comes down to, knowing how to talk to these sellers, and when you find an opportunity, I mean, kind of knowing how to capitalize on it.
Walk us through that. What do you think are the things that you've learned over the last couple of years as it relates to capitalizing on an opportunity? Because I see that happen a lot where um, there's a lot of opportunities that surface, but it's taking them across the finish line, right? What are some
Yeah.
strategies or tips that you might be able to offer up?
I think probably the biggest tip is, well, I guess one would be understanding what is an opportunity. Kind of being able to see some signs from a seller that's like, they might have some pain somewhere, whether that be they're just old and they want to retire, or they've got terrible tenants in there. There's so many things that could be going wrong with their life situation or the property specifically. But being able to recognize if they have some sort of pain and you might be able to find a solution for it. And then once you can recognize that there is an opportunity, knowing other investors that you can kind of bring that to that have the experience. if I think a lot of newer investors are afraid that they're going to give up 50% of a deal, but they end up missing out on the deal entirely. I
Hmm.
have no problem bringing an opportunity to another investor who's going to basically tell me exactly what to do and how to maximize this opportunity, and just giving him 50%.
Love that. Yeah. People are afraid to give up 50% of the deal, but they may lose out on the entire deal with that mindset.
Yeah, it happens all the time.
Okay, cool. So let's fast forward a little bit. You're now at a place where you have a portfolio of 22 units. Maybe describe for us the process that you've gone through to build up your portfolio.
Yeah, so that first year in 2018, I had sent out a mailer basically to all the multifamily in Omaha, and it was nothing special. I did write a personalized message, but it was postcards, so um, it was nothing, no secret sauce really. But I did write a message, kind of. It was somewhat personal, just letting them know who I am, that I'm a serious buyer, kind of thing. It wasn't just your average yellow letter. I think that's kind of the easy way out. You should at
So
least
you
write something
did
that.
you actually hand write the note, or did you do it through a service? How did you do that?
Yeah, so I have handwritten letters, but on that mailing, no, I didn't. I just put it on a postcard, put my company logo in the background, kind of made it look nice, and let them know I was looking to buy a multifamily property.
Cool. Love it.
Yeah, so I got a couple deals from that actually. I ended up buying a sixplex and a duplex, and kind of the way it went down was this guy had a duplex. It was a really good part of town, and um, he's just like, "Hey, like, do you want to come check it out?" And I was like, "Yes, absolutely." Like, I have no idea like what this thing's really worth, like nothing, but um, just a guy I've been talking to from Bigger Pockets. I was like, "Hey, like, want to come check this place out with me? Like, if anything comes from it, like, we can partner on it or figure something out." And he's like, "Yeah, sure." So we end up going in. He actually kind of saved me on that deal. we, so I took two investors with me, and um, one of the guys I took with me, his strategy a lot of the time is like, hey, like, we can give you cash and close this thing like super quick, like within a week. So it was kind of instinct for him to tell the seller that. He was like, it's like, "Hey, we just closed on some properties. Like, we could close this thing within like a week." And so the seller was like, they were basically like, "Okay, let's do it." And we agreed on a price. And actually only ended up partnering with one of those guys on it. But we still had that deadline of, I think it was about 10 days, but the only hard money lender I knew was out of town. So um, my partner, the guy I partnered with on it, he ended up cashing out his IRA. And then basically we closed on it with that money, and he had to pay it. He basically had to get that refied within, I think it was about 30 to 45 days, or else he was going to get a huge tax hit on it. So he took a pretty big risk with doing that. But um, but yeah, he did save me on that, and it's an amazing property in a great part of town. And
And that was the duplex. Is that
that
correct?
was the duplex. Yeah.
Okay. So to give someone perspective, what's a purchase price on the duplex or when you acquired it?
Yeah, so we bought that place for 112, and we put in about 40,000. Um, and it rents for about 1050 per both up and down. So yeah, since then
So
we
total
refinanced that thing.
rents. Sorry, total rents
About,
were just a little over 1,000.
yep. So since then we have refinanced that place, and it appraised for 280,000. So yeah, it ended up being a pretty good deal. We were able to pull out some money on that thing.
Yeah, that's great. That sounds like a killer deal. Cool.
Yeah.
Okay, so you found the duplex. You also found a sixplex from the same batch of postcards that you sent out. Is that correct?
Yep.
Okay. Talk to us about the sixplex.
Yeah, so the sixplex was it was in a little bit rougher part of town. It was more of a C area. It's kind of fringe, but just starting, I didn't really know the areas that well anyways. So I was just like, hey, we bought this duplex. You want to come check out this sixplex? Like, I don't know what this thing's worth either. So we went and checked it out. The guy's asking price was he was only asking 150,000, and rents were already at I think they were at 2,900 when we bought it. So
Wow.
yeah, it was kind of a no-brainer. His issue was he had one tenant in there who was just absolutely disgusting. She wasn't paying her rent she hadn't paid it for a few months, and then there were bugs like
Hmm.
all in her apartment. Just it was so disgusting, and he just didn't want to deal with that.
Hmm. So
So
how'd you structure the deal with him on that one? 150 grand.
so we structured it with 150 grand, and then we actually got a credit from him so we could replace the roof. So we
Gotcha.
got an $11,000 credit on that one, so we could go ahead and just replace the roof right away.
And did you go into it with the same strategy, cash purchase?
Um, we actually did. We bought that one with hard money, and we refinanced it within a couple weeks. Um, and we basically refinanced it with another bridge loan. That was another interest only loan, and we have since refinanced that one again. But yeah, we use cash just because it's a lot easier to get the deal done. And our interest rate on it was around 20%. And but we're holding it for 2 or 3 weeks. And yeah, we had to pay some extra closing costs, but um I try not to get caught up in the little numbers like that. And
Mm.
I think a lot of people, are really do. But at the end of the day, an extra 3,000, 5,000, even $10,000 on that deal isn't going to make or break it.
Yeah.
So
Yeah.
just got to do what you got to do to get it done.
Cool. So you had the original 3 units that you house hacked. Then you pick up the duplex and then the sixplex. Real quick, how did you structure these deals with your partner?
We just went 50-50 on everything. So I guess on the duplex, he did front some cash for it. So that was really great of him to do because I didn't really have the cash. But basically, when we went to refinance it, he just got paid back whatever extra he had put in before, and then everything after that was 50-50.
And then who is responsible for managing the properties on the back end?
He owns quite a few properties in Omaha, so he's got a management company, and he takes a management fee for them.
Gotcha. And so is he the partner on both the duplex and the sixplex?
Yep, he's partnered with me on most of my properties. Those two, and then another sixplex.
Okay, great. Cool. So this is great. So you have taken down, 6, 8, 11 units. How did you get to 22? Let's talk about that real quick. I want to finish that up, and then there's a few other questions I have for you. But how do you get to your 22? Rinse and repeat, same type of stuff?
Yeah, pretty much. But actually, after I bought that sixplex that I was just telling you about, um, I had found another place. It was a 12 unit. It was a really good deal. But I kind of learned the hard lesson there that banks didn't like 22-year-olds who, don't have a W-2 income. So even having some partners that have really good balance sheets and and all that, the banks basically denied me. They said, we're not going to loan you on this. And we tried quite a few banks. So just a note on that, I found since then that I think I could have found somebody to personally guarantee the loan for me. And I think I could have gotten it to go through, but I just didn't know about that then. But anyways, yeah, I basically got denied from banks after that sixplex because my debt to income ratios and my financials weren't quite there. So didn't buy anything for quite a while. And then later last year, I think probably, yeah, just in the fall sometime, I found another package deal. It was 10 units. It was a sixplex and a fourplex. And basically ended up partnering with him on these again. We took down all 10 and we ended up selling the fourplex, keeping the 6. So that got me to 17 units. And then I've done one single family deal that I'm holding on to right now. So that's 18. And then about 2 weeks ago, I closed on another house hack fourplex. So that's 22.
Cool. Well, that's great, man. In 2 years, acquiring 22 total units, 24 years old. Not a bad start to a real estate investing career. So congratulations on what you've accomplished thus far. What does your world look like today? You own 22 units, you're 24 years old. What do you spend the vast majority of your time? What does a day in the life of Logan Fast look like right now?
Yeah, so right now what I'm trying to do is kind of grow my wholesale and more the transactional side of things. And I'm actually trying to learn a lot more about the creative financing side and learning how to create cash flow from some of these single family deals that most wholesalers are going to pass on. So a lot of it right now, I'm just talking to sellers, making offers, just kind of the typical wholesale business type stuff. And I'm doing some marketing for multifamily as well, talking to some sellers there.
Do you have any specific systems in place, marketing in place that you're implementing right now to find your opportunities?
I'm doing a lot of texting and cold calling right now. So no secret sauce really, just reaching out to a lot of lists that might have distress. I think list stacking is a really good strategy. That's basically
Describe that for us.
Yeah, it's basically pulling different lists. Like you pull a code violations list, an absentee owners list, and maybe a tax delinquent list. And you find out which people are on 2 or 3 of these lists. And you can do it with however many lists you want. But the people that are on multiple lists are highly likely to be motivated to sell, and you just spend more of your time reaching out to them. You're going to get a better return on your mail if you're only sending it to these people, that kind of thing.
Love it. Okay, cool. So how much time would you say you're devoting right now to identifying opportunities for buy and hold multifamily versus your wholesale business?
I'm probably, to be honest, I'm probably spending way too much time on the single family side of things. It's probably like 90-10. And, when I take a step back and look at it, most of my wealth is created through these multifamily opportunities. So, I have been looking at shifting my focus and my resources a little bit more towards that side of things. Because especially on these multifamily deals, there's a lot of times you can get an acquisition fee, right? And hold on to the property. So it's kind of the best of both worlds. You get that wholesale fee and you get that wealth.
Yeah. Yeah. So what keeps you from going all in on multifamily then?
There's just also so much opportunity in single family. You can, and I've been seeing it more lately, is these creative deals. You can create $300, $400, $500 of cash flow on a single house, and just being able to build that up is huge. And then on these single family too, you can make wholesale fees, and that's kind of just what I live off of. So
Yeah.
that's kind of what
That's your
pays the
cash.
bills.
Yeah.
Yeah.
That's the cash generation part of your business. And then you're still looking for the buy and hold opportunities. But you got to have cash too to make those deals work.
Yeah, absolutely.
Okay, great. Well, I want to move into our Deal Dig segment of our episode here, and I want to talk about this 4-unit that you've house hacked. If you can, maybe just describe the asset to us and how you sourced the deal.
Yeah, so it's just a brick fourplex, really good part of town. It's just south of Midtown, which is just a really nice area they just developed a few years ago. But yeah, I actually, it's funny, I sent out, or my wife actually sent out about 150 handwritten letters. So it's funny, we didn't get a deal from those, but I was telling my business partner, because he had asked what kind of marketing I'm doing, and I had told him that we were doing this. And he's like, oh, well, like, I'm about to list this fourplex. Like, why don't you just buy this? So I ended up buying this from the same guy I've partnered with on a bunch of these.
Oh, that's great.
Yeah.
What was it about that deal that you liked?
It just made sense. The numbers kind of just, I knew we could get in there for 3.5% down, and he had fully renovated this place. So for a house hack, I think typically you're not going to want to go in there. Well, it depends, but a lot of times you're not going to have the cash or want to go in there and put a bunch of money into a property. If it's kind of turnkey and you can just put 3.5% down and live there for free, I mean, that's kind of ideal for me right now. So it kind of fit into that mold, and basically just took a quick look at the numbers, and the numbers worked.
So what was the purchase price?
It was 316,000.
Okay. And you put 3.5% down, FHA finance.
Yep.
Okay.
Mm-hmm.
And so roughly, what's that? Roughly 15 grand.
Yep. Ended up putting 15 grand down.
Okay. And what are the rents on it right now? Not excluding obviously your unit.
Rents are 2,200. While I'm living there, it'll be 2,200 from the other 3 units.
That's great. And what's your payment on that?
1,900.
Great. So not only are you living free, but you got a little bit of cash flow from it.
A little bit. Yeah, we're just gonna stash it for repairs and stuff, but
Yeah, that's great.
nice to have a little cushion.
And when did you close on that one?
We closed a week from last Friday.
Cool. Well, congratulations. That's great.
Thank you.
And how does your wife feel about house hacking?
She's really come around to it. She's really on the same page on kind of some of the things we want to do, with like taking some time to travel and doing that kind of thing. And I've kind of explained to her the power of being able to do these kinds of things, and basically just with what we're able to do with the house hack, she's completely on board.
Yeah. Yeah, I can imagine. Once she sees the benefits of it, I'm sure that swung her around to the other side.
Yeah, for sure.
Well, Logan, you've got a great story, and you've accomplished some really incredible things in a very short period of time, in the last 2 years, up to 22 units. Thanks for going into this fourplex house hack deal. I was going to ask, so you mentioned that he had pretty much renovated the whole thing. So have you had to put any more money into it other than the 3.5% down?
No, I think since we're living there, we're gonna do a couple extra things in ours. We're gonna get laundry and that kind of thing. Otherwise, it was shared laundry, but otherwise, no, we're not really putting any money into it. And we actually got the security deposits and May rent. So as I'm sure you know, closing at the beginning of the month, you're able to put that towards the closing costs. So that was another reason why we had to put less down, which is really nice.
Yeah, that's great. That's awesome. Okay, cool. Well, what does the business look like for you moving forward? What do you see on the horizon for you?
I really am looking to create location independence, and basically I want to be able to travel while maintaining my business here in Omaha. And we have plans basically to travel next summer, assuming everything's back to normal and we can do so. So I just want to kind of make sure I've got all the groundwork here to maintain a business that's doing 2 or 3 deals a month, and kind of just manage it from my laptop and phone on the road.
And what do you think are the key components for you being able to do, a couple deals per month remotely?
I think it comes down to having somebody that can basically talk to sellers. I think that's the biggest thing, because that's the thing that can't really wait. Everything else, even crafting an offer, I mean, I can do that. I can get them an offer within 24 hours, no matter where I am in the world. So, I mean, as long as somebody is there to answer phone calls, check out the property, that kind of thing, I think I can handle most of the other stuff.
Yeah, that's great. Good for you. Well, I want to wind down here. I've got our final 3 questions for you. The first one is, what's the biggest mistake or challenge that you faced on your investing journey so far that everyone could learn from?
Yeah, I think probably the biggest mistake I've made, one of many, many, many mistakes that I've made, is letting myself just get a little too comfortable, kind of taking my foot off the gas. It's very easy when you get a check for $15,000 or more to just kind of take a week to hang out and, feel like you don't really have any financial worries. So I've kind of let myself do that, and it's, it catches up to you within a month or two. Like it always does. And if you do it properly, you can use that money to, basically put extra weight on the gas pedal and really ramp things up. So that's what I'm trying to do now.
Cool. Good for you. What's the biggest win you've had on your investing journey so far?
I think the biggest win is probably that 10 unit deal I was telling you about. Yeah, it was the 6-plex and the 4-plex. We didn't have to put any money down, because they basically gave us 80% of the appraised value. So the bank paid for all of our construction costs and the purchase price. And then we ended up selling the 4-plex, and we made just under 70,000 on it. So not only did we get a 6-plex for free, we made $70,000. So that was a pretty
That's
good
great.
one. Yeah.
Yeah, that's killer. We should have talked about that one too. Maybe next time.
Yeah.
All right. What's the best advice you have for someone who's just starting their apartment investing journey?
Yeah. Just starting, I would say kind of learn the game, educate yourself, read books, at least learn all the basics, and then start reaching out to local investors. Start meeting guys in your market who actually buy apartments. Figure out what they're looking for, and then really, I think the way to add the most value to somebody is finding the deals. I really think whoever has the deal kind of has the power. And if you bring somebody a deal, I'm sure pretty much every investor is going to be happy to at least give you some kind of referral fee or acquisition fee, if not partner with you. And then at the same time, they'll walk you through the entire process from due diligence to, the entire renovation, refinance, and, the whole 9 yards.
Yeah, that's great. Great advice. All right, Logan, how can people get in touch with you? What's the best way for them to connect, learn more about what you got going on?
Yeah, just call me or text me. My number is 402-250-8357.
Okay. And we'll have that info in the show notes. Logan, thanks for taking some time, sharing your journey. And you're just getting started. So I anticipate some great things ahead for you. Love to have you come back on another year and tell us how the last year's been on your travels and also on your real estate investing. So thanks again for coming on and sharing your journey with us, and hope to connect with you again soon.
Yeah, thanks for having me on.